Welcome to the deep dive. Today, we're really getting into something fascinating, the world of wealth. Our mission, basically, is to unpack this collection called Wealth Potpourri, and the title really says it all. Mindset, your richest asset. What I find interesting is how it pushes back against that common idea, that wealth is just about working harder and harder. Instead, it argues, well, that real wealth actually starts up here, in your head. It's about mental shifts, money habits, and some pretty smart plays.
Absolutely. And we're excited to guide you through it all. We'll start with the basics, the mindset stuff. Then we'll get into some practical strategies, things you can actually use. And we'll even touch on a couple of, let's say, unconventional ideas too. The main goal here is for you to walk away with a clearer idea of how to find not just, more money, but real financial peace.
Okay, so let's dive right in then. The absolute core message, it just jumps off the page, is that your mindset really is your richest asset. It's not just about what you do with money, it's fundamentally how you think about it. And they don't just leave it there, it's grounded.
Exactly. And the sources really break down this wealth mindset.
Yeah.
It's about thinking long term, like years, decades ahead. It means discipline, right? Doing the hard things sometimes. And maybe most importantly, staying teachable, always learning. The point they keep making is you've got to master your thoughts before you can really master your money. It's like your internal wealth software.
That makes a lot of sense. Yeah. And this section, it's not the money, it's the mentality that really hammered it home for me. It's framed almost like a faith-filled guide, mixing biblical ideas with practical money steps. For some listeners, that mix might be a bit new. How does that biblical angle specifically shape the advice?
Well, that's a key point. It's not just generic advice. It looks at financial freedom through this lens of stewardship, meaning it's about managing what you have responsibly, not just piling it up. So it pushes you to look at the values behind your money choices. Principles like delaying gratification,
Right.
living below your means, making wise investments. But these are presented as being rooted in something deeper, like purpose, maybe even generosity.
Okay, yeah.
So delaying gratification isn't just logical finance. It's framed as like a spiritual practice that builds character, patience.
That's a really interesting way to frame it. And it gets practical too, right? With specific action steps described as both spiritually and financially powerful. What are some of those concrete habits they mention?
Yeah, they lay out a few really key accessible things. First, build that starter emergency fund, $1,000. And the point isn't just the cash, it's the mental shift. The psychological cushion it gives you reduces anxiety, like leveling up mentally.
Oh, wow. Okay.
Second, keep your housing costs under 25% of your income. A practical boundary stops you being house poor. And third, really embrace contentment over constantly consuming more. Finding satisfaction now, not always chasing the next thing. These aren't radical ideas on their own, but the source ties them to this deeper sort of spiritual discipline that pays off financially.
And there's that hot take you mentioned. The path to peace isn't paved in more money. It's built on better thinking. That really does flip the usual script.
It really does. And it's so important because it highlights that if your mindset's off, if you're not content, not practicing that stewardship idea, then, well, no raise, no bonus, no windfall is actually going to bring that deep sense of freedom you're looking for. So it makes you ask yourself, right, are your money habits actually reflecting your core values? Or are they pulling you away from what really brings peace?
Okay, so mindset first. Then the sources shift into more actionable stuff. Strategies. Let's look at this unit trust fee cheat sheet. Fees. They seem small, maybe boring. Why should we care so much?
Well, that's the trap, isn't it? Unit trust fees, those charges on pooled investments, like mutual funds, they seem tiny. But they quietly, steadily eat away at your returns over the long haul. It can be significant.
Right.
So the cheat sheet stresses knowing exactly what you're paying, management fees, expense ratios, any sales loads, and crucially, knowing which types of fees to just flat out avoid if you can. The source literally says spending 5 minutes on this could save you thousands. It's about protecting your growth.
5 minutes for thousands. Yeah, that's a good return on time. Okay. Then there's goals-based investing. Investing can feel pretty stressful or like you're just chasing trends. This sounds calmer.
That's exactly the idea. Goals-based investing means you tie your investments directly to your life goals. Saving for house deposit, kids' education, retirement. whatever your goals are.
Okay.
And because it's tied to something real and personal for you, it helps you make calmer, more confident decisions. It stops you from just, chasing the latest hot stock or getting panicked by market dips. It makes investing feel purposeful, not just speculative.
I like that. Purposeful. Okay, and for people maybe wanting to start earning a bit more, there's this guide, Quick Tips to Make $100 Daily. What kind of roadmap does that offer for a beginner?
It's really focused on being beginner-friendly.
Mm.
It suggests things like freelancing, using skills you already have on sites like Fiverr or Upwork, or various small online tasks, digital gigs, that sort of thing.
Yeah.
The whole point seems to be making that first step feel achievable. Like, hey, you can actually start earning something online, even without tons of experience or savings.
Lowering the barrier. Yeah,
Yeah,
makes
right.
sense.
Exactly.
And for real estate dreamers, how to score hidden property bargains. What's the secret sauce there? Finding deals others miss.
Yeah, it's about looking beyond the usual places. So not just the main online listings. It suggests checking out distressed properties, looking for off-market deals, maybe even talking to probate lawyers.
Oh, interesting.
And it emphasizes who to ask, networking with local agents who specialize in finding those deals, or property managers who know the area inside out. And then, crucially, how to position yourself as a buyer to stand out. Get those deals with less competition, better pricing. Especially good for new investors.
Okay, makes sense. Now, time to shift gears a bit into something the source calls a wild card. This trading strategy, 0 DTE, 0 days to expiration, sounds intense.
Yeah, intense is a good word. So 0 DTE options trading means you're literally buying and selling contracts that expire that same day.
Wow.
It's incredibly fast-paced, very sensitive to tiny market moves. The writer mentions learning this in a group called the Super Investor Club, which they describe as like an educational thing with weekly video calls, trade signals, and they stress that this club focuses on data, only taking trades where the probability seems high.
Okay, but with something that fast, risk has got to be huge. They mentioned the Kelly criterion. What is that, and why is it so vital here?
Right, risk management is critical. The Kelly criterion,
Yeah.
well, it's basically a mathematical formula. It helps calculate how much of your capital you should risk on a given bet or trade to maximize your long-term growth without blowing up your account.
Ah, okay. Bet sizing.
Exactly. Smart bet sizing. The source strongly emphasizes using Kelly principles to never trade more than your portfolio size allows for that risk level.
Yeah.
It really brings up that classic question, especially with high-speed stuff like 0 DTE. How do you balance chasing potential gains with really disciplined, calculated risk?
Yeah, that balance is key. And they even share a real example, right? A profitable trade.
They do, which helps make it less abstract. It was a bear call spread. So they bought one call option for $340
Yeah.
and sold another call option for $404 at the same time.
Okay.
The strategy basically pays off if the market stays below a certain level.
Mm-hmm.
So they placed a trade, went to bed,
Ah.
woke up, and the S&P 500 index, the SPX, had stayed below their sell strike price of $57.10. So after fees and commissions, boom, profit of $96.40, just like that. Shows how quick it can be.
$96 overnight. Sounds tempting. But I bet there's a big but. The source includes a warning, right?
Oh, absolutely. A very strong one. They explicitly say, do your own due diligence if you're even thinking about looking into that super investor club. They mention it's a monthly subscription. There's a trial you can cancel. But the core message is clear. This stuff is complex, potentially risky. You absolutely have to do your homework and understand what you're getting into before jumping in. No shortcuts on research.
Right. Due diligence is non-negotiable. Okay. So we've covered mindset, strategies, even this wild card. Bringing it all together, what does this mean for you, the listener? The creator of Wealth Potpourri actually shares why they started it all. What was their motivation?
Yeah, it's pretty relatable, actually. They talk about feeling overwhelmed by money themselves at one point.
Yeah.
Seeing people they cared about stuck in debt cycles, but also seeing others quietly building real wealth, often through just patient, steady actions over time. So the platform, Wealth Potpourri, exists basically to share those lessons, the tools, the stories, things they wish they'd known earlier. It's kind of like trying to give people a bit of a head start on figuring this stuff out for themselves, on finding that financial piece.
A head start. I like that. And this whole deep dive, it really reinforces that idea you mentioned earlier, becoming a true wealth explorer,
Yeah.
digging deeper.
It does. And it even connects back subtly to that did you know bit about the super expensive sandwich, the $214 one.
Oh, yeah, the exclusivity thing?
Exactly. That wasn't just about a fancy sandwich. It was about how value can be tied to exclusivity, uniqueness, not just basic need. And that idea kind of runs underneath everything we've discussed. Being a wealth explorer is about finding that unique value, whether it's in shifting your mindset, uncovering those hidden property deals, or even understanding a niche strategy like zero DTE. It's about looking for opportunities others might miss.
Finding the hidden value.
Right. And just as a side note, the source mentions they keep the platform fresh, using affiliate links for tools they actually use and like.
Yeah.
So if you click through, you might get a deal, and it supports their work at no extra cost to you.
Good to know. So wrapping up, I covered a lot. How mindset is foundational, your most valuable asset. But we got into smart strategies for investing, earning, and even touched on that unconventional zero DTE trading approach. Quite the journey through wealth potpourri.
Yeah, and if you pull back and look at the big picture, all these different threads,
Yeah.
they really seem to be about gaining control. Finding that sense of peace with your finances is not just about stacking up more cash. It's almost a journey of self-discovery, too.
Definitely. The big takeaway, it feels like, from all these sources is it doesn't matter so much where you start. Becoming financially free isn't really about one big win. It's more about that consistent journey, right? Learning, adapting, and making sure your actions actually line up with a clear mindset. Building that foundation step by step.
Which leaves us with a really important question for you listening right now. How might shifting your own perspective maybe away from just chasing the next dollar towards deliberately cultivating that wealth-aligned mindset we talked about and then acting on it? How might that truly transform your financial path in the next year? What's maybe one small step you could take, even today, to start exploring that?